Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. A pretty mixed day today here. We had the S&P 500 was just up 0.18 points, the Dow was down 11, and the Nasdaq was up 9. Not much has happened today. What we did see is a slight sell-off in the Dow in S&P 500 futures after the close. So we saw the market started to move to the downside, as you can see by this intraday chart. Now we are still near the all-time high, but we are backing away from it near this 24.95 region. So the market is not really moving up quickly. It's not going down, and there's some indecisiveness in the market here. If we do get a close below this 24.75 level, that could open up the downside to some profit taking, because I believe that people are thinking that this market is a bit stretched and we could see some profit taking here in the S&P 500. Notice that the market, it's still in an uptrend, but it's not an explosive uptrend. Ever since August, the market is just going up ever so slightly. The Dow is pretty much the same picture, where we have slight moving upward in the market, and we see the market backing off today. Now, this market, as I said, is very stretched, and we could see some profit taking here in the market. The question is, will the tech profit taking be wide and vast, or will it be just a few points here or there? And I believe once the Dow stays above this 21,500 level, the bulls should be fairly comfortable. But the action today really was in the U.S. dollar market. The U.S. dollar index is trying to rally off of this support in this 91 and 92 level, and we saw the market rallying today. The market bottomed out at 91, and let's just take a look at this weekly chart. Market went down below support in this 92 level and looks to be trying to get back above this 93 level. If we do see a snap rally in the value of the dollar, this will be what we call a false break. A false break happens when the market appears to break the support area, comes down, breaks the area, and then snaps right back up. This is what we call a false break, because you have folks shorting the dollar on the break of this support, and the market snaps back, and what we could see is a fairly explosive rally from this so-called false break. So the dollar, that's where a lot of price action was in today, and we'll continue to watch the value of the dollar over the next couple of days. Because the dollar was up, we had a weakening euro. Euro broke out of its minor triangle. And let me just show you the triangle on an intraday chart. Market was consolidating, and the euro broke to the downside and found support at this 118.53 level. Now, this 118.53 level is fairly significant, because we had some support points here in the 118 level. So what we want to see for the snapback to really gather some steam, we want to see the market close below 118, the euro close below 118 on the futures charts, and we could see a strong rally in the dollar if that happens. 118 and also 116.80, those are the two critical levels here for the dollar. If we breach those levels, we could see a wider pullback. British pound pullback along with the dollar. We see the British pound at 134.89, closing the day. Taking a look at the Canadian dollar. The Canadian dollar was also clinging to the support area, but actually ended the day slightly up. And the Japanese yen was down on the day. We see the yen on the futures chart closing at 89.50. So the US dollar gaining across the board pretty much. And what implication does that have for the gold market? Because a lot of folks are looking at gold as a buying opportunity. I believe it's a buying opportunity also, but you have to buy at the correct time. So taking a look at the gold market, where is that gold chart? Okay, taking a look at the gold market, we see that gold was down on the day, and I believe that we could see some further pullback in gold. The market rallied up to the 1,360 level, and we could see a pullback into 1280, even down to 1220. That will be pretty normal for gold. So bear that in mind. We could see a further pullback, and when we see that pullback, what we want to see is how the market responds. What is the price action like? Do we see buyers stepping in at that level? If we see buyers starting to step in and we see positive price action, that could indicate that a buy signal is at hand, and it will be a good time to put on a position in gold. So gold is a market we're definitely keeping an eye out on. Taking a look at the crude oil market, we had a huge rally in oil yesterday. For those of you who are technically minded, we see that the market broke out of this triangular consolidation and broke to the upside. Now, what we want to see in crude oil is to see if this market can break above the $54 to $56 region. If that happens, that will be fairly bullish for this market, and will complete a bottoming process in crude oil. And this has been a bottoming process that has taken some time. For those of you who are technical traders, you'll recognize the head and shoulders pattern here, where this is a left shoulder, right shoulder, a head. This is the neckline here, and what you want to see is the market break the neckline, which it did. It pulled back, and this is the move to the upside. So we want to see how far that market can go to the upside. Okay, taking a look at some popular stocks, looking at Facebook, we see Facebook had a very interesting day yesterday where we saw the market really decline strongly and broke support in this 164 region. Now, if you are long Facebook, this is still a market to hold, but beware if we start to see this market dipping below 155 to 160. You may start looking at options to tighten your stop losses under this market. A mistake that I see a lot of investors do is that they may ride this wave to the upside in Facebook. Let's say they got in at $60. What they do is they get in at 60, ride it all the way up, and then the market comes all the way down and they ride it back down. If you buy something at 60 and sell it back at 60, how much money have you made? $0. So this move to the upside was just paper profits. I'm not saying Facebook is going to collapse down back to 60, but all I'm saying is that you have to have an exit plan when to take profits on some of these positions and not just ride them up and then ride them back down. That makes absolutely no sense at all. Amazon, and these are the stock inquiries we get a lot of. Amazon, Facebook, Nike, Netflix, popular stocks. We see a head and shoulders type pattern appearing in Amazon after that move above the 1,080 level. We see the market coming back down, and this again is a stock that you need to have an exit strategy. If we see the market coming down into the 900, 850 region, it may be a time that you look to take some profits on this position. Looking at a weekly chart of Amazon, we see that this market has a huge bull move. Since 2010, it was at $100. It's over 1,000. or was over 1,000. So again, look at points to take profits on some of these positions. Netflix. Taking a look at Netflix, went back up to resistance. A couple of weeks ago, I spoke about the fact that the market could challenge this 190 resistance level. It did, and is backing away from it. If the market starts to dip below the 160 level again, look to be taking some profits on a position like Netflix, and that would be my plan of action. Clearly, a lot of stocks are pulling back, and it is hurting the value of the S&P 500, hurting the Nasdaq, and hurting the Dow. So we just have to keep an eye on some of these individual positions. Okay, thank you very much for listening. Tomorrow, remember, if you have any positions you want analyzed, you can send in a email and we'll gladly do it for you. Tomorrow we'll be taking a look at some more stocks and also some ETF plays that could be good over the next couple of weeks. Thank you very much for listening, and I hope you have a wonderful day.